Hello, my name is Arpit Agarwal, and today is a historic day in the history of this country. Today, the BSE Sensex crossed 50,000, and I thought I'll come and have a little chat with you. What's the chat about? What I've been trying to say virtually all my life, that whenever there is a crisis in the stock market, that is the best time to invest. So let me give you a few examples, and I'll take you back not too long, just about 9 months and 10 days ago or 15 days ago. By the end of March 2020, it looked like the world had ended for equity investors. The market was down and down pretty seriously. I'll give you those numbers in just a minute. And every single or most of the media that I was reading, whether it was coming from the best, some of the topmost equity analysts or some of the topmost economists, some of the topmost investors across the world, was that this crisis of COVID-19 will cripple most economies, especially Indian economy, because India does not have the infrastructure to cope with a disaster of this magnitude, and India will take few years, not few months, but many years to recover, and our economy will be in doldrums, as a result of which equity market is a disaster. Look at January 20th, yesterday's NAVs of mutual funds, today's index, and the world is a different place. There is no better asset class than equities. That's what it looks like. So what has happened? Let me give you just a few numbers and I'll come back to it. I'm going to look into my laptop and give you a few numbers. When I stand on 31st of March 2020 and look back from 31st of March 2020, and if I had invested in any of the major large cap fund, any of the major mid cap fund, multi cap fund or small cap fund, or even the Nifty 100 TRI or the Nifty 150 mid cap TRI or the Nifty 250 small cap TRI or just the Nifty 500 TRI, which comprises large caps, mid caps and small caps. On an average, I was looking at a 3-month negative return of 28%. I was looking at a 6-month negative return of 24.5%, a 9-month negative return of 27.1%, and a 1-year absolute negative return of 27.7%. 25%, over 25% of my capital got wiped out in just a matter of a year. Now let's extend that time period a little further. On a 2-year basis, on a CAGR, compounded annual growth rate, 2 years was looking at minus 9.8, 3-year CAGR was looking at minus 6.1, and for 5-year period, the CAGR was just 0.2%, which means all the money that I invested 5 years ago, as of 31st of March 2020, I had virtually made no returns on it. So net of inflation, I had lost money. So what happened with all the negative news that came and hit through the media, through various online platforms, through chats, through WhatsApps and all of that, many investors lost hope. Many redeemed from their existing investments. Many stopped investing, and as a result of which, when they look back the last 9 months, it seems that was a really bad decision. Now when I position myself 9 months, 10 days later on 31st of on 20th of January 2021, the same numbers look like this. Across the same funds, same indices, 3 months absolute plus 25.6, 6 months absolute plus 37.1, 9 months absolute 56%, 1 year absolute 36.2%, 2-year compounded annual growth rate on an average 9.4%, 3 years CAGR 16.9, and 5 years at 12.0. See the change? From 0.2% CAGR on a 5-year basis, just 9 months and 10 days can change it to 12% CAGR on a 5-year basis. What is the lesson? What is the takeaway from this? If you are an equity investor, then a steep correction or a crisis for you is like a sale in the market. When your favorite shirt is at 30% discount, or you have a scheme, of buying a car or a two-wheeler or a television or a washing machine, and the same thing is being sold at 25% discount, you probably fast track your decision and say, I always wanted to buy this. Now it's available at 25% cheaper. I might as well buy it now. How come in the stock market the behavior is exactly the opposite? When the market is at its best discount, the mood for investing is non-existent. And when the market is at its all-time high, 50,000, the mood for investing is so great that everybody is asking me, what should I buy now? And that's where the problem is. When you invest, you have to invest in a company, or you have to invest backing a country. So if you believe, the fundamental belief if you have in your heart that India as a country will do well, then within India there will be several hundred companies which will also do well, irrespective of what happens in the world. Short term, temporarily there may be setbacks, but on a longer term basis they will always continue to do well. And equity investing is just that. Either you have the time, effort, energy and the information and the acumen to pick those companies yourself and invest directly, or you have the option of taking your money and giving it to a professional equity fund manager who's been doing it for decades for a living, does that for 12 hours a day and probably reads another 4 hours a day, and they will look after your money. Hopefully this last 1 year, the fall and the steep rise should give you enough data to believe that if you think India will do well and if you think Indian companies will do well, then equities will always do well. I'll talk to you soon.